Welcome to ShortView Trading. This is your morning market hit for Monday, the 4th of May. What matters today and this week for traders? So markets failed last week at key resistance levels. For the S&P 500, that was its golden ratio Fibonacci retracement level. It's 61.8% retracement at around the 2930 to 2950 level. As you can see from the chart in front of you now, we sort of touched that level and then started rolling over in the S&P at the back end of last week. For the Nasdaq, it's similar, but a higher retracement level. The 76.4% retracement, as you can see in the chart in front of you now. The Nasdaq's certainly failed at that level last week. And interestingly, on Friday, all sectors were lower in the S&P 500. All top level sectors ended the day lower, led by cyclicals. In particular, energy was very weak, down 6% on the session, but financials and real estate also were soft, as was consumer discretionary, with Amazon down 7% plus on the trading session. Despite that, cyclicals still remain overbought relative to defensive sectors, as you can see in the chart in front of you now. And as we flagged up on this chart at the back end of last week, cyclicals were overbought coming into the end of last week, and they're still reasonably overbought relative to defensives. On top of that, the price action in the Philly stocks was also interesting, with the index gapping lower on Friday and closing down sharply. We remain cautious on these markets. That's a message that's consistent with what the short-term models have been telling us. In the middle and back end of last week, they were on sell. They're now rolling over from sell levels, but remain at high levels. In particular, if you look at the combined risk appetite model, the RAG1 plus RAG2, it's rolling over from sell. The risk appetite scoring system is also rolling over from sell. Technically, the market's been overbought and remains pretty reasonably close to the overbought level at the moment, whilst of course tech led the relief rally and tech fund flows were strong, so our Nasdaq fund flow model is also still on sell. So the short-term models have got a fairly consistent message: sell last week and rolling over from that now, whilst risks remain high in this market. And over the weekend, we've seen a pickup in the China-related risks, and in particular, the rhetoric that Trump and the Trump administration are using about China, blaming them for this pandemic and for their slow warning to the rest of the world. That rhetoric's been feeding into the renminbi, which was very weak on Friday, particularly the offshore. And Trump backed all that up with his Fox News interview Sunday night in the US. So risks are rising in that part of the global financial picture. Of course, they remain in many other areas as well. US high yield spreads still flatlining, with little more tightening seen since the initial move on the Fed announcement about buying high yield spreads. Added to that, medium-term models are now increasingly edging towards sell signals. So we remain cautious about this market. We think there's a strong argument that it's rolling over. For full details on how we're playing this, please see today's Daily Rag, available to subscribers and on the website. So what are we watching today and this week? Well, there's plenty going on. Today in particular, the macro data is quite light. I think Italian car sales will be interesting for the month of April to see how that played out under lockdown. But over the course of this week, there's some big data. There's some big data points, naturally including Friday's nonfarm payrolls out of the States. Consensus estimate is for a fall in employment of 22 million in April. Added to which, we've got ISM non-manufacturing during the week and PMIs coming out throughout the week from across the globe. US earnings, of course, continue as well. I think Disney will be particularly interesting amongst many others. They report on Tuesday. Elsewhere, we have the Bank of England as well on Thursday, with some sense that they may do some more in terms of QE or some of the other programs. So that's it from us. That's your morning market hit for Monday, the 4th of April. Thank you for listening. Please do subscribe on YouTube, LinkedIn, Facebook, and/or Twitter. Simply search under ShortView Trading. Thank you for listening. Stay safe and trade well.